in the month of March when we spoke to you, you were cautiously optimistic, but now you are bullish. There is growth all across sector, all markets are growing, everything is firing full cylinders.
Nikunj, when we spoke in beginning of April, in March, beginning of April, we believed fundamentally that technology will be a solution to businesses facing the crisis that was unfolding all around us. But our immediate imperative was to ensure the security and well-being of our own employees and to ensure that our operating model quickly reconfigures to be able to scale securely to operate in this new SBWS environment. So, we did fundamentally believe that technology will be a solution and therefore there will be even more relevance of our services to our customers. And we were confident about our ability to switch to the new operating model. And that was what was underlying the commentary that we had given early on, that in about 6 months' time, end of Q3, we should be looking at coming back to parity. And that from a cost structure perspective, also from a margin perspective, by end of Q4, we should be looking at parity. What has changed during the course of the last 6 months is that we have been able to execute first on the operational resiliency, what the program that NGS laid out. And secondly, we have been able to actually participate significantly in this technology-led transformation that is at the heart of our customers' response to the COVID crisis. So the first quarter was about our internal resiliency. The second quarter has been about participating in the customer side. Both of this was underlying our original commentary on how we saw the way forward. Today, we are a lot more confident because both legs have been executed. And so it is with that confidence that we are giving you that our comments.
Would you like to describe the word confidence, Rajesh, in any numeric numbers for us apart from sharing the order book number?
No, Nikunj. I'll stay away from putting any new numbers compared to what we have already shared yesterday in our earnings release. But I'd be happy to discuss, qualitatively anything around those numbers and drill down into a bit.
NGS, when a company of the size of TCS uses words like a multi-year cycle has got unleashed and the architecture is moving towards cloud, that's a very, very, very powerful statement, NGS. So I'm just going to spend some time, NGS, trying to understand that what are you trying to communicate here, because this is a statement which in a sense could be interpreted in many ways.
Sure. I think what we are seeing, in addition to what Rajesh mentioned, clearly there is an urgency to accelerate the digital transformation of, on all fronts. Three priorities. First one is resiliency of their IT landscape, whether it's infrastructure, applications, and so on. The second one is that their own internal employee experience, right? Can they continue to operate remotely and safely and then contribute even more productively, right? The third one is customer experience. How can we continue to be wherever our customers want to do business with, and their experience has to be touchless, contactless, while provide all the accessibility options for different segments as possible, right? I think if you put these three things together, then the migration to cloud becomes very, very important, right? So traditionally, cloud was always seen as, yes, everybody is going there, we should go there. Is it secure enough? Will it scale? Will it create problems for me? Can I have all the flexibility that I have in my internal data center? All those questions have been more than adequately answered in the last 6 months, right? So the intent is to really move to a hyperscaler platform with agility, resilience, adaptability, flexibility, and all those things, right? These 4 or 5 attributes that I talked about, there was not a value assigned to it in the overall business case in the earlier situations, whereas in the current context, they provide significant value. And there is clearly an urgency to say that, look, I'm going to move to that kind of an architecture, which is much more modern, much more futuristic, which means that when you go and invest in this, it's not going to be a simple hop on and hop off. That once you move in there, it's going to be irreversible, and you got to continue with that journey for, let's say, a 3 to 5 year term, where you will pretty much become native. You will embed your businesses into that technology, by which you will extend your organizational capabilities with the ecosystem concept and bring in a lot more credibility with which you do business with your customers. And that's the multi-year transformation that we are seeing, Nikunj.
So NGS, what you're telling us is very important. Correct me if my interpretation is wrong, and I don't want our viewers to get it wrong. What you're telling with us is that this is not like a sugar rush or a Y2K rush, that you got sudden visibility in business and this will peter down. What you're sharing with us is that you are confident that the trend, what you have reported, observed and share, is here for next 5 to 7 years.
Absolutely. I think, technology thing, anything more than 3 to 5, is very difficult to call out, but we are very confident about 3 years, because it's something that is something we have visibility to, I think. But in the digital technology is kind of the speed with which innovation comes, the speed with which newer possibilities and newer products come is incredible, right? It is nothing compared to what we have seen the earlier days, where, there is stability for a few years, right? So given that, I think 3 to 5 years is a reasonable bet to make, right? But within that 3 to 5 years, there are going to be a lot more newer ways of working, newer ways of doing business, newer ways of reaching out to customers. All that is going to emerge.
Rajesh, if the COVID crisis would have not happened in April, then looking at the kind of commentary you've shared, will I be right in saying that FY21 minus the COVID crisis could have been a double-digit growth year for Indian IT sector?
Not necessarily, Nikunj, because in fact, in your own channel, we have discussed in the past, last year, that the technology has existed, and there is widespread belief in our client universe that that is the right technology stack to go to, and customer balance sheets were also in a good place. So there was the technology imperative, there was the investable capacity. What was missing was a business trigger, and I had shared that it is very difficult to know what that business trigger would be. Maybe a few of the leading companies will adopt it, and then the competitive pressure will shift others to do. What COVID has done is it has provided a business trigger to it. So absence of COVID, would this adoption have been at the same speed? I'm not so sure. It's unfortunate that the trigger happened in such a negative way, but that is what has kicked in. That is the trigger for the shift that has kicked in. So, that's the way to understand what is going on.
Rajesh, just to clear the air on the buyback, you are considering a buyback at a premium to market price when the stock is at an all-time high and P multiple is at a 5-year high. What has prompted you to do that?
Nikunj, buybacks in India, considering that there are two routes, and the route that we've taken, which is proportionate distribution using tender mechanism, the pricing per se is not a very big determinant, because it's unlike open market transaction. This is a proportionate distribution. There are emotional elements associated to it. So we have been maintaining that fairly stable premium that we are giving to the undisturbed price before the announcement. And if you look at it, this premium compared to the undisturbed price before we made the stock exchange notice is in the same range that we have provided in the past two instances when we did buyback. So the price per se is actually should be neutral, like a price of a rights issue. That is the lens that you should see the price from.
NGS, work at home for IT companies is the new normal. Milan just shared a number with us that 97% of the workforce of TCS for the quarter gone by was working from home. So do you think there are a lot of new normals which have been pressed for TCS now, whether it is work at home or a cut down in SG&A or the travel cost? Are these one-time costs benefits which have kicked in are permanent in nature, and this is going to really add up to your bottom line and margins now?
Nikunj, we are not even looking at some of those parameters. I think what we are looking at is that, employee safety. How do we enable them to work remotely? And how do we continue to make sure that they are able to deliver securely and in a robust manner, so that, things are managed well. Things are, our delivery excellence quotient doesn't drop, right, when we really work in a remote way. So our focus on location independence, or focus on collaboration, bringing them together. In the last 3 months, quickly, we have upped our quotient on delivery guidelines for delivering through secured borderless workspaces, number one. Then how do we enable, let's say, a delivery center stage where at any point in time, instantly delivery managers can come together and help each other out if there is a contingency that needs to be resolved, or a new design that needs to be validated. Right? There are multiple things that we have done to make sure that this particular thing is loved by everyone, our employees, and equally by our customers. And we are seeing that. And people love that flexibility that they have. People like that, there is, I was talking to one of the CIOs the other day, and he was saying that, look, their experience is that, look, this conference room crap has completely gone away, and people are able to come. The collaboration meetings are a lot more democratic. They are able to decide faster. They're able to deliver things faster. They're able to incrementally innovate. Multiple elements or levers of productivity which is there. I think we are completely focused on making sure that it is working superbly, and people are able to deliver productivity with a lot of pride.
I'm going to Rajesh for my last question, but before that, I want both of you to react to this number that TCS has crossed a market cap of 10 lakh crore and will only add on to that today based on the numbers. So let's capture a smile from both of you. TCS has got a market cap of 10 lakh crore. It has compounded wealth at 22% plus from its listing. Okay, now I've got that photo op moment, not a selfie moment, but a camera photo op moment. Rajesh, since you are using words like multi-year trend, it is based on client engagement, visibility and order book. Since this is a big reboot in the technology space, will there be a reboot in your margin band as well? Because now you have the opportunity, scale, skill and even volume to go past your previous margin band.
Nikunj, our operating philosophy has been to maintain stable margins. So we are very systematic about trying to manage within that range, which is, I think, net beneficial to all stakeholders, customers, our employees and our investors. So I don't think our target margin band changes based on what we're seeing.
What is stopping you, Rajesh? Because if you're sounding excited, if the commentary is much more bullish than I've heard in a long time, isn't time to really execute something different there?
Again, as I said, Nikunj, it's similar to what NG has just said. See, that is not the metric in and of itself that we are chasing. We have always said that our confidence on margin comes from the business model and our approach to it. Short-term volatility will have its own impact. And it's more a philosophical thing. There is no right margin to operate at. It is relative competitiveness and what is the aspiration that you have. And we think that it's a fair and achievable and sustainable band. And that continues to be our guiding principle.
Well, let's get the smiles going. Gentlemen, congratulations for shareholders of TCS. I mean, it's a time to do Bhangra or cartwheel depending on what your preference is, but extraordinary set of numbers and congratulations on that.
Thank you, Nikunj, as always.
Thank you.
Ramki, some are surprised, some are astonished, but everyone is happy with what TCS has delivered for the quarter gone by. My question, Ramki, is that how does one know that the kind of uptick which has happened in the business is not a sugar rush and is not something which is short term in nature? Because Rajesh is saying that this is a multi-year trend. Now, what are the chances that the business which you've got could be compulsive, and the business which you've got could largely be a function of immediate migration which may not be there after 2 or 3 years?
I think technology and its benefits to businesses and enterprises as well as various other sectors is here to stay. That is a huge compelling paradigm, and it is going to the core of how enterprises are shaping their own future. So I think, Nikunj, the multi-year is really multi-year. So there is absolutely no doubt about that. And increasingly, see, the question is, how do you bring the benefit of so many emerging technologies and marry it with the knowledge of the customer's own business and their current environment, their future environment, their systems, their processes, and also the deep knowledge of that particular industry. When you bring this all together and then you are able to do it at scale, and you are able to do it in an agile fashion as well as in a very distributed fashion, like what has been demonstrated and which we believe is a very strong thing going forward, I think all of it can come together. So this is definitely not a flash in the pan. This is, in fact, we had said that over the course of the year, we do believe that the growth will come back. Yes, it has been a little faster than what we ourselves planned out, but we are living in extraordinary times. But definitely we believe that this is something which will continue, the momentum will continue. Of course, we are still not out of the woods. There are still, the pandemic is serious, and the effect it has had on economies around the world is not something which one can discount. But the overriding factor is that technology is what will has helped companies respond, and it will be very significant part in the recovery and the revival phases. So that's where this comes in.
Ramki, let's talk about this current quarter then. What is the right way of looking at the current quarter? There is going to be a seasonality, that is the headwind. And then there is deal momentum, which is going to be a tailwind. How will this quarter be different from the traditional Q3s?
Seasonality will be there, but it's too early to say whether it will be more or less than what it is in the has been in the past years, because sectors have also been going through significant changes. For instance, in the entire retail space, the discretionary retail has been doing well, but a large part of the non-discretionary retail has not been active at all. Now, with the holiday seasons coming up, and hopefully their business activities will go up. So I think some of those seasonality factors we'll have to wait and watch. Yes, from our own orders which are booked in the last few quarters, plus the pipeline, and also the momentum which we are seeing in the geographies as well as in the sectors, there are enough indications that we should be able to continue to do well, continue to go on this trajectory for the next few quarters. But as I said earlier, we should always temper it with what is happening. So we should be cautious on sort of going too far ahead on this journey.
Okay, now TCS has always maintained that you would like to maintain a margin band. Now that growth is back, is there every reason for me to believe that you're likely to migrate towards the upper end of the band?
I think, see, our aspiration has always been to be better from where we were in the last couple of years or even 3 years. So the aspirational band does not change. So the goal is to be in that. Of course, a number of factors come into play. One, growth was definitely lower than what we had expected even in the last 2-3 years. We were on the cusp of getting back to on a sustained double-digit growth, but then things happened. So growth had a factor. Other than that, structurally, I think from various factors, we are definitely well poised. Currency is one factor which one has to take into account. So we are not moving away from that goal, and whether with the increased momentum which you are seeing currently, it does not in any way take us away from that goal. And we will be always focused on it, Nikunj.
Ramki, one question on buyback. The fact that TCS is considering a buyback when the stock price is at a life high and P multiples are the highest in last 5 years. What were the consideration behind coming and arriving at a price? Because companies normally they do a buyback when there is depression in the market to reward shareholders. Your stock price is an all-time high. P multiples is at a 5-year high.
See, I think we have been clear on our capital return policy in terms of percentage of our free cash flow. And we've been having a combination of instruments, both dividends as well as buyback. So one has to see it in that context. The second is, of course, while the price has to be at the same time, we have to be conscious of the fact that it has to reflect on a more long-term basis. So yes, the interest in the stock has been significant. But one has to weigh all factors in terms of our own, the choices of instruments in taking this decision. So one cannot be only by the EPS currently and the PE currently. I think it's a combination of various factors.
Okay, well, Ramki, an absolute pleasure interacting with you. And thank you very much for joining us, and thank you for sharing with us what is the way forward for TCS.